Google is facing a massive threat from AI tools like ChatGPT. So today, we're going to use ChatGPT to predict Google's stock price 5 years from now. Google is pouring $75 billion into AI investments this year alone. And the crazy part is they might already be so far behind that they may not be able to catch up. We're going to dig deep today to figure out the most likely scenario for Google's stock in the next 5 years. We're going to pour over the hard data from its competitors, how fast they're growing, as well as really assess the parts of Google's business that would be most impacted by the disruption. How bad will it be? Or does this represent an opportunity? All right, let's dig in. So we're going to start with the heart of the issue. If tools like ChatGPT can just answer your questions instantly, what does that do to Google search? To do that, we're going to ask ChatGPT to pull the most recent information about its competitors, including their daily average users, how fast those users are growing, and how those users' behaviors are shifting from utilizing Google search to utilizing tools like ChatGPT. So I'm going to ask you this question. What is the latest data available for usage data on ChatGPT, Gemini? Gemini is Google's ChatGPT competitor, Claude, including growth rates and how user behaviors are shifting. Be sure to turn on the search function when you ask this question so that you can get the most accurate, up-to-date data. So it provides us with some information here that we can start to conduct some analysis. So ChatGPT has currently between 600 and 800 million estimated users. Gemini has 350, so roughly half of what ChatGPT does have. Claude is a distant third. ChatGPT has grown 25% between February and now. So that's roughly 3 months. Using that growth rate, it means that they will more than double just within a year. Gemini is selective about the data that they provide. So they're providing the number of visits. We don't have that same information for ChatGPT. Now let's look at user demographics. So looks like the younger generation is using ChatGPT, so Gen Z and college students. Gemini seems to be more tailored to workspace users. So these are people who have Google Workspace accounts. And workspace accounts are typically utilized by companies. The difference there might be Gen Z and college students, less disposable income. Companies, for Gemini, more disposable income. So that could represent a potential advantage for Gemini if they continue to grow their user base. And we have a summary of the weekly active users here. So similar to what we just talked about, the total active users for the month, user demographics skewing younger versus slightly older with Gemini. In terms of user behaviors, the younger generation is increasingly using ChatGPT in their daily workflows. Older folks, the first thing you think about is Google search and typing in there, but younger generation is using ChatGPT more and more, which could represent a massive growth opportunity for them. Gemini seems to currently be tailored more to businesses because it's increasingly being used as a referral source, driving significant traffic to retail websites. So that summary compares the products head to head, and Gemini seems to be standing its ground here. But the critical thing is that these 600 to 800 million users did not exist for ChatGPT prior to just 3 years ago. Every single search, or 90% of the searches that were performed on the internet, were typically performed in a Google search bar. So this represents some cannibalization of searches that would have been otherwise going to Google that are now going to ChatGPT's Answer First platform. So the next thing that we want to dive into is the revenue segments that Google has and how they have been impacted or not by the influx of competitors like ChatGPT into the search ecosystem. So I asked this question: which of Google's revenue streams are most impacted by competitors like ChatGPT, and what portion of revenue and searches or users have stopped or reduced their usage of Google's services as a result of tools like ChatGPT. So let's see what answers it gives us here. So here we can start to see how the threat is playing out. So first of all, search ads constitute the bulk of Google's income. I wish ChatGPT would have provided me with exactly how much, but we can always ask that question next. This is a reminder that how you prompt ChatGPT will determine the kind of results you get. So I could have provided a better prompt here so that I could get the exact revenue figures. But we know that search ads constitute the bulk of Google's income, and we can see it start to impact Google's paid click growth. So paid clicks grew only by 2% in the first quarter of the year versus 5% in the previous year. Also now when you type anything into Google, you see the AI generated summaries, and that's starting to cannibalize Google's advertising business as well. For the first time since Google has had a partnership with Safari, which is the browser on Apple devices, they saw a decline because users are starting to adopt tools like ChatGPT and Perplexity, which is another AI tool. Another ominous sign, Google's search market dipped below 90% in late 2024 to a high of 89%. There are other estimates that suggest that the search market share may have dipped as low as 65 to 70% from 90%. So to really understand the impact of this, I'm going to ask it another question to actually provide me the revenue from each of Google's revenue streams so that we can assess how bad the decline could be if the erosion continues. So I ask it, can you provide me with the revenue and profitability for each of Google's revenue streams for its most recent quarter and most recent year? So here are the results for Q1 of 2025. Google Services revenue, which is where its search business is, grew by 10 percentage points with an operating income of $32.7 billion or a 42% margin. Now, we just talked about the fact that its search dominance might have declined from a high of 90% to as low as 65%. So what that means is if the number of people searching on Google decreased by that much, it means that Google has enough pricing power to create this increase in revenue at significant margins. But how long can that last? That's the key question we're asking. And as we look deeper into Google's revenue segments, we can see that by far its Google Services segment, which is where its search business lies, is where most of its revenue comes from and what most of its profitability comes from. 42% operating margins from its Google Services segment. Its cloud business only generates 17.8% operating margins, and its other businesses essentially lose money. So any decline in Google search revenue has an outsized effect on Google's overall operating margin, and that's the threat that we're facing with this business. So the next question I'm going to ask it is, based on our conversation and the data thus far, what risks could the increasing use of AI tools pose to Google's search ad business over the next 5 years? In addition to your analysis, quote other analysts that provide data to show what the long-term impact could be of Google's decreasing search market share. So it provides some data that we can use here. So it talks about Google's search share declining to 89% as of April 2025, and in the US it's declined even more than that. Talks about the risk of reduced click-through rates, especially because Google is testing its AI overviews now, and that's led to a 34.5% decrease in click-through rates. 80% of the users on Google are now completing searches without engaging traditional search results. So the blue links that we're all used to, most users aren't clicking those anymore. And even though ChatGPT is only 2.1% of search traffic, it's growing by 740% a year. So think about that for a second. That means by next year, it will be at roughly 15% of the total search market if it continues to grow at the same rate. That is a massive threat to Google's business. So let's put some numbers to this. Let's have ChatGPT run some simulations on a few different scenarios. What happens if Google's search share declines by 15% a year in a worst case scenario, 7% a year in a base case scenario, and 2% a year in an optimistic case scenario? How does that impact its overall revenue base? So I ask it, can you run the calculation on Google's revenue base and profitability, assuming 3 scenarios? First, 15% year over year decline in search. Second, 7% year over year decline, and 2% year over year decline. Provide an estimate of the company's profits in each of those scenarios. Feel free to make some assumptions where data is not available in order to arrive at a number. Sometimes you need to fill in those prompts more fully to get better data out of ChatGPT, but this is much faster than going through the process of calculating it on Excel, especially for those who are not comfortable with tools like Excel. So let's see what it gives us. So it actually went through and provided us with some good data here. So it annualized Google's search revenue, and gave us a total figure of $202 billion. And then the operating income for that period would be $122 billion. And in our worst case scenario, in 1 year, that operating income would decline to $111 billion. Here, it's assuming a decline in revenue and not a decline in search share, which are two different things. It's possible that search share could decline, but revenue stays flat or increases because Google has a lot of control over its pricing for its customers. So in scenario 1, we have $111 billion. Scenario 2, $117 billion. Scenario 3, $120 billion. That's the optimistic case for operating income. Now, what I'd like it to do next is to show us what this could look like if the decline continues for 5 years. So can you extend the decline in search revenue for 5 years and show what this could be for each of those years? So ChatGPT has a hard time doing these calculations to do it for multiple years. It can only do calculations for single years with specific data and prompts for that particular year. So for this type of analysis, we'll still need to pull out our Excel tools. But at some point, the tool is going to be able to do these calculations, and we're going to follow the journey as it gets closer and closer to being able to provide us with exactly the information that we need. But for now, I'm just going to ask it for a bull case, bear case, and base case scenario for Google stock based on the growth rate of the use of AI tools. So I will say, provide me with a bull case, bear case, and base case for the growth, not for the growth, for Google's stock price in 5 years from now, assuming the continued growth in AI tools. So it does a good job of providing this data. So it says by 2030, in the bull scenario, Google stock could be at $650. But how does it get there? Well, it's spending $75 billion a year currently working to integrate AI tools into its ecosystem. And so assuming that it does that effectively, it will help it reach this price in 5 years. Google has a very diversified revenue stream with continued growth in businesses like the YouTube business, the cloud business, and the other ventures, including Waymo, which is now providing 200,000 rides a week in the United States. That in and of itself could be a significant business. Also, the business could continue to grow into other emerging markets. So that's the bull case. In the base case, advertising growth doesn't grow significantly, but it stays steady. Remember, Google still has pricing power. So maybe they start charging 2 times or 3 times the cost per click than they used to in order to maintain advertising revenues. There's balanced growth in its other businesses like YouTube and the Google Cloud segment, and that will get it to a base case price of $387 per share. In the bear case, the stock still grows from where it is today, which is right around $160 to $265 by 2030. But that's not a significant growth rate. That would be slower than the market in the bear case. And in that case, it sees a significant erosion in its search dominance. It continues to be pressured by regulatory agencies to break itself up, or maybe it's broken up by then. And maybe there's market saturation at that point and it's not able to capitalize and outcompete its new competitors. So which of the scenarios do you think is most likely for Google stock going forward? Is it going to be able to innovate its way through this threat it's facing from many key competitors? Or is the business now on a slow, steady decline? It's hard to tell right now, and we probably need a few more quarters of data in order to assess the performance of the business. And that's what I'll be doing. So why don't you comment below and tell me what you think? What path do you think Google is gonna go down? Do you think they're gonna be able to navigate this or be outcompeted by their competitors? If you enjoyed this video, check out this other video where I show you how to analyze stocks using ChatGPT. I'll see you in the next one.